Hey everybody, Lance Martin, Coldwell Banker Town and Country. We are back with our September 2021 real estate market snapshot, an add-on, if you will, to our real estate market forecast. This is the third month we've actually taped these and we're sending them out. So here we go. It has been an interesting 30 days. So we're going to do the same thing we've done the last couple of months. So I'm hoping to kind of build an audience here and see if you guys will come back every month to see what's going on. So just to put it together on what we're going to be talking about today. Inland Southern California, we're going to basically cover Riverside, San Bernardino, and Los Angeles counties only, because those are where I have my offices. We're going to talk a little bit about interest rates. I'll skip ahead. Interest rates are unchanged in the last 30 days. We'll come back to that in a minute. And an update on the eviction moratorium. We will not do the eviction moratorium update on this video. It's going to be a separate video, so if you're interested in that, just follow the links and you'll be able to find it. Some interesting stuff has happened in the last 30 days. So let's jump right in. Median price, LA, Riverside, San Bernardino counties. I need to put the word county on here just for clarity. So what have we done? I mixed my charts up a little bit differently, so if you're following this from last month, it's going to look a tad different. So we've got a 2-year chart for the 3 counties combined on median price. If we go back from August 19 to August of 2021, we have a 32.5% increase in median price over the last 24 months or 2 years. That is insane. Something to point out, I'm going to do a lot of charts. Keep an eye on this little upper right-hand corner up here. You're going to start to see some median price bars that are a little bit smaller than what they were in the prior month. Yes, this bar is smaller than the prior month. What does that mean? That means the prices softened a tad, or whatever adjective you want to attach to the prices pulling back. That median price for the 3 counties, by the way, is $620,000 for the median priced home in those 3 counties. Now, same chart, but what I did now is let's just take a look at the last 12 months. So here's the same chart with the 12-month view. It's a 19.2% increase in the last 12 months. For those of you that are paying attention, you might say, wait a minute, Lance, I just watched the August update, and the August update had this at a 25% increase. You are correct, but the price was a little bit lower in July of 2020, and the price was a little higher in July of 2022. And the difference between those, apparently somewhere around 6%. So again, a 19.2% appreciation in the median price in the 3 counties. I've also added, for those of you that are going to kind of follow us along in the series, I've added a little trending bar, so you can kind of sort of see a little bit what the trend is, and obviously the trend is still very positive and upward, and in this particular case, by 19.2%. So that's what you're looking at for the 3 counties on median price. Next chart is going to be our supply and demand chart. How many listings are being taken, how many properties are being put into escrow, and how many escrows are actually closing. Here's our 2-year. I kind of like this. Obviously, I did it. So 2-year chart, again, I put on that little trending chart. 2 years ago, red bar is active inventory. Today, or at least August 31st, red bar is active inventory. 31% decrease in active inventory from 2 years ago. We don't have as many houses to sell, all right? On the under contract side, 20% more properties in escrow in August of this year than 2 years ago, and we sold only 3.3%. That's closed, by the way. The 2-year chart is similar in a lot of ways, but the inventory not as dramatic because we came down quite a bit in that prior 12 months. But here we are with the 12-month chart, 11.4% decrease in active inventory in the 3 counties. Under contract is up 7%. That's these blue and green bars down at the bottom, and the solds are up 4.8%. So you might ask yourself, Lance, looked like the median price had pulled back a little bit in that prior month. Why is that happening based upon a smaller standing inventory and what appears to still be a very active demand, buyer demand, which, by the way, doesn't appear to be. There is still a very active demand in the buying side. Less standing inventory, but we actually pulled back ever so slightly on the median price. You would think that that wouldn't happen. And I would have said, if you gave me a choice, would prices go up on smaller inventory and high demand? The obvious answer would be yes. Well, that did not happen last month. We can probably take a deeper dive into that, but not right now. So those are the 3 counties. Now we're going to look at Los Angeles County all by itself. Again, similar chart, 2 years, median price, 30% increase. But again, look at what we've started to see here a little bit. We've actually seen a softening in the increase of median price in LA County, actually over the last 2 months, okay? So that's the 2-year chart. Here is the 1-year chart. And again, the chart is exactly the same, by the way. There's no difference in these bars. I'm just isolating the last 12 months. 16.7% increase in median price in LA County. Again, though, keep an eye on these last 2 bars. So for those of you that are really, really concerned, prices are too hot, things are heating up a little bit, you may draw some conclusions from that. I'm going to draw some conclusions, as in years past. We start to see it's not, you don't have bars go up, 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 up every single month of every single quarter of every single year. It just doesn't happen. You do see these pullbacks, and quite honestly, to see a pullback in August and September or October and November is not that unusual. So it doesn't necessarily trigger the beginning of some price collapse or implosion, although I know there's several of you that might think that. But at any rate, we've definitely seen a slight pullback in the median price in LA County. Again, this is the supply and demand for Los Angeles County. Again, very similar chart. Inventory down 28% from 2 years ago. Contracts up 22% and sold. I went too fast. I didn't even see what that was. Last 12 months, again, standing inventory down almost 18%. The 3 counties combined, I think it was around 11. But again, pendings are up 10.9%. Those are buyer demand. So that's a strong demand. 10.9, let's call it 11% more buyers went under contract in August of 2021 than went under contract in August of 2020. An increased demand, less inventory, but we still saw that slight pullback in median price, so go figure. And again, the solds were actually up by 10% for LA County. The next county up is Riverside. Again, similar charts, but again, just like LA County, if you take a look at Riverside County, these 2 months, what do we got here? June and July were basically flat, ever so slight pullback in median price in the month of August. Again, is that something to be alarmed? Well, let's take a look at 2 years ago. Well, looked pretty flat, went up in October, looked like December. Well, then we saw a little bit of a dip here. Now, last year we didn't see anything. Last 12 months will be the first month in what I think is probably 13 months where we actually saw the median price pull back ever so much. What is that median price, by the way? The median price in Riverside County is $527,500 as of August 31st. By the way, all of this data is CRMLS data. The program that I'm using to pull the data out of is Broker Metrics, so that's the source behind this. The 12-month chart for Riverside County, solds up 19.9%, similar to what we talked about before. If you watched last month's video, the number was approximately 25%. Why is it different? Well, because this bar here is a little higher, but this bar here is a little lower. So 19%, still, actually call it 20%. Still ridiculous amount of appreciation year over year for Riverside County. And the supply and demand chart for Riverside County, again, very, very similar. 35% less inventory from a year ago. Contracts up. And then from 12 months ago, look at this. All right, so Riverside County, this is the stuff that I love. So for those of you data junkies that just can't connect to this, I apologize. But this is the reason I do this stuff. Now I look at Riverside County and I see basically what, for all intents and purposes, is a flat change in inventory. If you notice, we were decreasing inventory last year, coming into August, decreasing inventory. We actually peaked in, I think this is May of 2020, and then we actually went down. Well, our inventory, even though it's been horrible in the Riverside County, I'm constantly railing against it, but it has been increasing. It's basically been increasing month over month over month over month. We just kind of started off at a low baseline and we never really shot up. Well, we did go up. We continued to go up with inventory in August, which basically means we're almost in the exact same place inventory-wise in Riverside County than we were 12 months ago. So even though we still have what I would call an inventory shortage because the demand is still high, but again, look at the demand, 5.6% increase from a year ago. I'm going to call that almost flat, okay? So we have a 3% less inventory, 5% more under contract. So again, higher demand, less inventory, but still that median price still pulled back ever so slightly. And by the way, we're only talking a few $1,000s. So a couple of crazy sales could throw that median price out of whack. So let's not get too crazy with that. And then the closed escrows are the sold. That's 1.5% decrease in closed escrows. That doesn't necessarily surprise me. So for those of you that are worried about the green arrow down there, normally you don't see down arrows that are green, but basically those are closed escrows that were a little bit lower than a year ago. But again, we've had such a low inventory level for most of this year. It's kind of hard to sell a whole bunch of houses when you have 10, 15, 20 people writing offers on one house. If we had more houses, that green down arrow of 1.5%, in my opinion, would be up. So there's your Riverside County stuff. Now let's move to San Bernardino. And again, very, very similar, 32.9% increase. But again, look at the far right bar. That's a pullback in median price in San Bernardino County as well. The 12-month chart for San Bernardino County is still up 23.7%. Nothing to go crazy about. But again, the county as a whole, granted it's a big county, as in all of these counties are, but again, it did pull back a little bit in the month of August, but still 23.7% up year over year, just absolutely nuts. Supply and demand chart, again, very similar. I'm going to blow past the 2-year chart. Let's go straight. Does this look pretty similar to the Riverside chart, Riverside County chart that is? Yes, but it actually even makes my prior point, assuming I made a point prior, even clearer. Basically 0.5%, 0.5% inventory change. And actually for San Bernardino County, we have 0.5% more active inventory in the month of August of 2021 than we did a year ago. Let's call it flat. The under contract, so again, the demand was still higher than it was a year ago, 3.4% demand. And again, August last year, we got to put everything in context with COVID. For those of you who are like, well, yeah, but that was a COVID year. Yeah, but the inventory, the demand for real estate last August was insane. I mean, we just had an absolutely insane month of August from a demand perspective in COVID. Well, the demand in San Bernardino County was even larger by 3.4%. And then the solds are flat, completely flat, 0.0. It is flat. Basically, we sold closed escrows on the, I don't want to say it's the exact same. It might have been off by a couple houses here and there. But it basically, statistically, a flat number of closings for San Bernardino County. So what does all of that mean? Generally, the demand is still fantastic. The supply, depending upon where you are, San Bernardino County, flat. But also increased, by the way. I pointed this out on the Riverside chart, Riverside County chart. Here we're flat, but look what's been going on for the last 6-7 months. It's trended upward month over month over month over month, okay? If we go back a year ago, this is August of last year, down, 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 down. But so the projects, assuming these charts replicate themselves, which most of the time they do, we should start to see lesser inventory on the marketplace. If we go back 1 year ago, same, almost exact same chart. This is May of 2020. Inventory peaked a little lower, and inventory continued to drop all the way until we got to February of this year. So that hasn't happened in San Bernardino County or in Riverside County. We have basically seen that trend go upward. So is September going to be the month where we see the active inventory pull back? We have a big debate going on in our office. The charts would say yes. There's part of me that says no. There are several of people that I talk to and I trust that are saying, hold on, Lance, I think you're going to see inventory increase in September. That would be unusual. That would be another one of these COVID effects where, you know, where are we with a variety of things which we don't need to get into right now. But anyway, so very interesting stuff. So on balance, the supply is fine. The demand is ridiculous in a positive way. But we've seen an ever slight pullback in the 3 counties that we're doing business on median. Oh, by the way, the median price in, let me go back. I don't think I mentioned that. Oops, sorry, let me go back 2 slides. The median price in San Bernardino County was $485,000. I forgot to mention that earlier. So those are our 3 counties. We've kind of covered all the bases on that. So next thing we want to chat about real quick is, I threw in a bonus. Guys, you may not know this. Lakewood Long Beach area is home for me. So I think every month when I do this, I'm going to just pull a random city and say, what's going on in Long Beach? So that's the pick of the week. So I know I've got a lot of friends and family that are from Long Beach or still live in Long Beach. So this is for you. So what's happening in Long Beach? I just did a 12-month chart in Long Beach. I got to tell you, I was a little surprised. Median price in Long Beach year over year, only 6.5% increase. I will tell you that's a much healthier price appreciation than these 16, 19, 25% appreciations. And also look, it's a little choppier. Long Beach is a big city, by the way, and this is Long Beach. This isn't, Naples and 2nd Street. This isn't North Long Beach. This is all of Long Beach combined, including everything in between. And you've seen a little bit of choppiness as that price goes throughout the year. But again, 6.5% increase in the city of Long Beach. And then the supply and demand in Long Beach, which again, I found interesting, is, remember we just said the county of Riverside, San Bernardino County? Well, now we're in LA County. By the way, Long Beach is in LA County, not Orange County. In LA County, but the medium, scratch that. Supply of available houses down 20% from a year ago. So if you're in Long Beach and you're a realtor, or if you're a buyer, it's like, oh my gosh, I need more houses to sell. So they've seen a pretty significant drop in available inventory year over year in the city of Long Beach. Under contracts are still solid, up 2%, and they've actually closed 4.5% more. So these basically, horizontal bars here, that in effect is stability. The buyers are stable and the closed are stable. The active inventory, maybe not so much. So next month, we'll throw in a city. I don't know if you guys have something specific, send it to me. Okay, last month I mentioned that CoreLogic stuck their neck out. I just thought we'd reference this chart because they're predicting a 3.2% appreciation based upon, and this is nationally, by the way, up from these really crazy nationally. It looked like the number was 17, 18% appreciation at this year. So when I say, wow, look at that, they're really, it looks like a horrible number based upon what we've been looking at the last year or two, but I like 3.2%. Based upon some of the stuff I just showed you, who knows? Maybe CoreLogic got something here, and we'll start to see these charts flatten out a little bit on the price side. So more to follow on what CoreLogic has to say. Interest rates. Okay, this is the chart I showed you a month ago. I know we've got our split screen here, which is cutting us down the middle on that. But anyway, 2.8%, 30-year fix. This is Freddie Mac's from Freddie Mac's website a month ago. And this was pulled up from yesterday. By the way, today is September 11th, 2021. And it's materially unchanged. All right, so basically 2.88% on a 30-year fixed, and nobody cares about the ARMs. The 15-year, pretty attractive, basically a little over 2%. So why is the demand so high? Demand is so high because these interest rates are ridiculously low. So if you're still on the fence as a buyer, get off the fence, go out and buy something. If for no other reason, this is the only chart you need to take a look at. This is the only chart you need to take a look at is this one. Interest rates are fantastic. So if you can qualify for the home you want and you can get yourself an interest rate somewhere around 3%, you should buy. Don't pay any attention to the median price numbers or call me and I can tell you why that's not important. Okay, the last thing we're going to wrap up today's video is the eviction moratorium. If you want more information on the eviction moratorium, follow the links. I'm going to do a completely separate video on that right now, and it'll be available. It'll be connected to that. So thank you very, very much for attending our September 2021 Market Snapshot. We're going to be doing them every month. We'll get them posted everywhere you can find us, and thanks for watching.